Which one's the best crypto asset? Well, Bitcoin's the best crypto asset. Okay. What's the second best? There is no second best. There's no second best crypto asset.
Hello, friends, and welcome to the Why Bitcoin Show. I'm your host, Dale Warburton. It's a weekly podcast on why Bitcoin matters and what makes it completely different to all other cryptocurrencies. If you're interested in Bitcoin and you'd like to distill crypto fact from fiction, you've come to the right place. Jeff, welcome to the Why Bitcoin Show. And I say welcome to the show, but we are in your offices here today. So thanks so much for agreeing to chat to me today.
No, thanks, Dale. Thanks for inviting me in my office to have this chat. Appreciate it.
Awesome. No, then you've got a wonderful view. Yeah, pity we can't actually show the viewers, but yeah, no, it's a real privilege to be here. So thanks so much. I'm going to ask you a question that is frustrating for a lot of people who get interviewed a lot, but I think for those who haven't seen your prior interviews, would you mind just sharing us your Bitcoin origin story? How did you get into this space, and then we can go from there?
Yeah, I mean, I've heard of Bitcoin in 2013, actually April 2013. It was actually on the Reddit thread because I was following the Greece financial crisis. And then subsequently the Cypriot financial crisis, where basically the government was doing billions for people's savings to do that. So like, I didn't really understood a lot of the terminologies back then, billion, bill out, a little bit, but it felt something was wrong, right? It's like it was the citizens' money. People worked their life, and then they were part of the savings are confiscated to bail out the government's own mistakes, and also the rest were just inflation and things like that just kills people, right, in terms of their purchasing power. So someone mentioned Bitcoin and explain what Bitcoin is. I was explain like a 5-thread. I still have the link, by the way, because I shared it to Facebook then. So that was my first foray into Bitcoin. So yeah, like many people that first heard about Bitcoin, it wasn't just an aha moment in an instant. It took a bit of education, especially back then. There weren't many resources. I think the only one that was good was Bitcoin Talk. But again, then it's hard to ask questions in Bitcoin Talk because there was always a hierarchy of the early 2011.
Oh, really?
It's like, hey, just refer back to this post and everything. Because practically Bitcoin is so simple, right? If you actually understood Bitcoin, everything is very mathematical, very logical. So if any questions you have about Bitcoin has already been answered. So it's somewhere there, but it's just this information asymmetry that was for newcomers versus people that has already did a lot of research. And the same thing today, right? In fact, I actually feel that it's actually harder to learn about Bitcoin today than back in 2013 because you got so much noise, Back then, there was like Bitcoin and maybe Feathercoin, and people don't really care about that. And today, you got all these things, Web3, NFT, and when you're about to understand Bitcoin, then people talk about this stuff, CBDCs, Web3, Web4, Web5, whatever, right? So I think it's very hard for newcomers today to concentrate, actually understand, and build their knowledge base on Bitcoin. That's why I got a strong passion on explaining Bitcoin. Like I actually, not to brag, but I think I can explain a lot of concepts and technical concepts behind Bitcoin in very, very simplistic terms. And maybe that's why some of our clients love us. Yes. Because we're able to talk about anything that they have questions about Bitcoin. Sometimes our clients might be an advisor. They have their internal PD days that we go to and educate them about the asset class. Sometimes it will just be high net worth investors, family offices, people that are in control of the finances of the family, but just wanting a little bit more to understand before they get involved. So they're on the fence, but also general public, right? That's why we have a resource section written up about Bitcoin research on the Monochrome website. Yeah, okay. In fact, that initiative was started with me and Haas McCook. So Haas, everyone in Australia, and especially if you've been Bitcoin for a long time, Haas. He's one of the most brilliant minds in Bitcoin. He's written probably one of the most number of in terms of words, like research materials on Bitcoin since 2013. So he's a gem, and we should protect him in Australia.
Yeah.
But that's I think
that's sort of how you found your way in the space.
Yeah, and then I did a bit here, did a bit there, and then I started Monochrome in 2021, which is I saw this wave of institutional investment not actually coming in, but I see signs that are priming for institutional investment to get institutional investments to get ready into the asset class, right? So I think, for example, Sailor came off the radar around that time, before that, and I just went like, we got to build something, because until Monochrome existed, there was not really a regulated, robust way for everyday investors to buy Bitcoin. Right? Until the Monochrome Bitcoin Trust exists, there was no regulated way for retail clients to get exposure to Bitcoin in a regulated, protected way, right? Whether philosophically self-custody versus a structure like a regulated trust, well, I think the audiences are very different. But we'll go into that, how we've gotten around the ethical barrier of putting people into different choice baskets. But
I'm definitely keen to unpack that. So that's a really good sort of overview as kind of who you are and what you've been doing. I think let's just go back a step, because we definitely want to jump into the Monochrome, origin story and kind of and the offering as a whole, and then, as you say, the whole self-custody versus institutional custody options and that sort of thing. Let's just have a look now. As you said earlier, I thought what was quite interesting is it's actually harder in some ways to educate people today than it was back then, just because of the noise. And that's obviously what's prompted me to do this podcast. Is I want to help essentially separate the signal from the noise. And we've got Web3, we've got crypto, we've got CBDCs, we've got NFTs, we've got all this garbage. I'd love to get your take kind of up front as to how do you distinguish between crypto and Bitcoin in your own mind? What's your mental model like? And then following on from that, like, how do you actually explain that to whether it's institutional investors or if you're just orange pilling normies?
I mean, these days I don't really try, because I feel that people have to go through the trial by fire, because you can orange pill them all they want, but if you haven't really gone through and explore the peaks and troughs of the industry, it's very likely that they'll get sucked into something eventually. Whereas the way that I talk about it, even internally with my team, and everyone that works at Monochrome is passionate about this industry, right? Naturally we got people with experimenting with different types of asset classes in this space, but my personal sort of take and conversation that happens within Monochrome walls is pretty much like, well, Bitcoin is competing as money, and most of the crypto projects are competing as technologies. So if you look at it that way, you don't actually care about what the other crypto are doing and how they would affect Bitcoin, because I think the idea of Bitcoin only is, well, it makes sense if Bitcoin only if they're talking about digital scarce money. But if you're talking about things that are just technology based, things that are programmable, there's smart contracts that it's fine, right? Let them explore, let them play, because every foray into certain features or function, if it's successful, eventually will come into Bitcoin anyway.
That's right.
And if that hasn't been tried before and the path hasn't been worn enough, people are still going to want to do it, right? Because human nature. Right?
Yeah.
It's like no one. If you tell the fire is hot, don't touch it, they'll hurt you. Who knows? Someone will touch it and then hurt himself. Maybe someone will touch it and invent something, right? Fire.
Maybe there'll be something good that comes out. Like, essentially, that's what you're saying.
Exactly. So I like the way that I tell people is that don't try to sort of lock yourself into like everything has to be money, because some of these things are clearly not money. They're just technologies. They're just a better way to do something that is in a lot of centralized systems. It does help in some ways to democratize some of this access to information, but it's not fully decentralized. I mean, like even fully decentralized in an oxymoron, right? You either are decentralized or you're not.
Half pregnant. You can't be half pregnant. Yeah,
that's right. So I think you just have to. Even like I have friends that are very big into Ethereum, right? And when the proof of stake split, some of them were just they were just quite upset when the Ethereum community went in the direction of this is ultrasound money, because they kind of go like, this is not ultrasound money. Like Ethereum is a technology, it's a utility. And then they believe that a utility needs a lot of this iteration. It doesn't need a lot of overkill centralization like Bitcoin does, because all it needs is just to function as a tool. Whereas, that's why it's important not to misconstrue the objectives of the asset class, and really do the research and understand what the different types of asset classes are trying to do. Like Bitcoin, like I say, Bitcoin competes with money as money. A lot of the crypto competes as technologies.
I think that's pretty much how I tend to divide it. I mean, I call them unregistered securities. I call them companies. Most of them have an actual person involved. Usually there's, in Ethereum, you've got a guy running around in a unicorn outfit on stage. That's where the decentralization side of it actually makes me laugh, because I think there's no ways you can actually believe that it's truly decentralized. But I think that's a very fair characterization. And you, like a lot of people, have said that, look, if there's anything good being built on these other technologies, they will come to Bitcoin in due course. The main focus really for Bitcoin seems to have been just to kind of be very slow moving and very careful about the types of upgrades and updates that you do, because I think what we've seen with Taproot was, I don't think a lot of people could have foreseen that through Taproot, people would start being, minting tons of NFTs on Bitcoin. And, sometimes these things have unintended consequences. So I think that's fair enough. When you talk to institutional investors, are they able to see that distinction though?
Yeah, there's two types, right? As professional investors and institutional investors, right? Professional investors include the ultra high net worths, family offices, even some advisors, personal foray into the asset class. Like institutions, you're talking really about like the big end of town, right? Superannuation funds, the retirement fund equivalent in Australia, and also treasuries for big companies, or even state treasuries. These are what we call institutions. Institutional involvement is it's a very careful market. No one wants to be the first. No one wants to see being the first.
Yeah.
But if you actually look into a lot of the controllers of these assets, even though careerly, from a career perspective, they're not allowed to talk about it much. But deep down, they really believe that, this is something that has to be part of the future. Because in the professional investment community, we have two types of people, right? Or maybe three types of people. So the first type of people, they are believers. So they have high conviction and high knowledge. And these are usually rare, because the time it takes to really understand Bitcoin, like, it's not like a 1 week thing.
Yes.
You got to really spend time understanding multiple curriculums to understand why Bitcoin is why it is. And also that's basically the ones that you don't have to convince. They might already have their own setups. They might have the nodes. They have the cold storage, but in their day job, they don't talk about it.
Yeah.
And then the other ones are the high conviction but low understanding class. So these people, they are usually standing on the sidelines. They go like, I really believe in this stuff, but I do not understand enough for me to commit my money into it, or serious money into it. Okay. So that's it might just because they're just too busy. Yeah. Because these people have businesses to run, or they want to go racing all the time or whatever. So that's sort of where we come in, right? We set up a really regulated, protected, everything is very familiar with for them from a traditional financial product perspective. Yes. And we'll go into the pros and cons of that for the right type of people. And the third group of people, they are the low conviction and low understanding group. Mm-hmm. So these people are the angry ones. Like, they don't understand Bitcoin enough, and yet they obviously don't believe it, and they would be very reluctant to have any conversations about Bitcoin other than constantly being angry that this thing won't work, it shouldn't work, and
Peter Schiff.
Yeah, like the Peter Schiff type.
Yeah,
right?
Yeah.
And I can understand, Peter Schiff. To me, I think he understands Bitcoin enough. He's been in the space for so long. There's no way he doesn't understand it, but he has a conflict of interest, right? He runs a gold company.
Yeah.
Whereas there are some advisors in a space, or someone's boss in this traditional finance space is just completely like, nope, I don't believe in Bitcoin. This will never work. governments were never regulated, although even though Australia did.
Yeah.
Big institutions would never care about this. You can bet my life on it. But obviously the BlackRock stuff, I think they're losing their minds now.
Yes.
But it's like, with that kind of scenario, we just don't engage. We're like, okay, fine. We're here, what we do, and that's fine. If that, we actually, because of that, it inspired us to write a research piece about ethical framework to approach Bitcoin as a fiduciary. Mm-hmm. Fiduciary means you act on behalf of your client, money and things like that. We did sort of raise the ethical question of, is that a advisor's fiduciary duty to actually say, not say no to Bitcoin just because they have a cognitive bias against Bitcoin.
Yeah.
Because to make a investment decision and to not make an investment decision, both have to go through a due process if you're actually doing your job well. So our goal in that case is just providing investors all the knowledge and information they need to make an informed choice of whether to pick Bitcoin as part of the investment menu. And that's it. That's all we do. Yes. We don't try to influence you. We don't try to sell you Bitcoin because, like we know in Bitcoin, like it doesn't need us. Bitcoin is such a big, piece of a machinery right now.
Yes.
Which is small cost of the pie. So it's not like I'm getting a commission from the CEO of Bitcoin for selling Bitcoin. Yeah. This doesn't happen. So it really is that, we believe that this is a thing that people should pay attention to. We believe that, people should not have no Bitcoin at all. And in 2023, when you got governments regulating it, you got ETFs that are pending application, you already have futures ETF approved. You got institutional investments and institutional support around the asset class, whether it's clearing, futures exchange, custody. You also got, guys like BlackRock, Wisdom Tree, Fidelity, Citadel, all entering the market. So I think, and plus there's all this uncertainty around the world with the fiat sovereign risk of pretty much what's happening around the world. Is really, there's a non-zero chance that fiat currencies won't fail catastrophically, categorically. Yeah. So, whatever that non-zero chance is should also be applied to a non-zero allocation of Bitcoin,
Get of zero. Get of zero. Yeah.
Yeah. Because in actual fact, if you look at the credit default swaps on bonds, like they're not zero. People pay a premium to ensure the collapse.
Even the US state, which is technically risk-free.
Exactly. It's not risk-free when there's a market that bets on the collapse of, whatever, right?
Yeah, totally.
So it is like, I feel like it's not a problem of the asset class. Bitcoin has a problem since God knows when. It's such a boring code that just keeps functioning. Like its role, in society, it's very clear what it's trying to do. I think the only problem is the information asymmetry. People are not receiving and consuming the right type of information for them to make a informed choice. We see a lot of criticism of Bitcoin, but if you tear them apart, they're actually criticizing something like a Dogecoin, which doesn't really exist with Bitcoin. Or they're pretty much, another way of putting it is like someone's criticizing gold because something it rust, or the stuff that I put in my car rust, so gold it's going to rust as well, but not knowing that gold doesn't rust, right? So it's like there are the different types of assets in this even in the digital asset space, that it's very easy to conflate one to the other. That's why we try to educate people to, separate Bitcoin and non-Bitcoin crypto assets. So it's like, they're two different things, not saying that one's not valuable to the other, whatever, because I think even a lot of securities are very valuable. Apple is a security, it's worth more than Bitcoin, right? Google is a security worth more than Bitcoin, right? If you imagine you have something that can take over the role of Apple plus Google plus Amazon, it's going to be worth a lot of money. So it's not like securities are not a bad thing.
Yeah.
It's just that, you can't be trying to sell something but pretending it's not a thing. And then that's where I think it just messes up with newcomers' minds, whereas like they think they understand the asset or the asset class, but they actually don't, because they're just being fed with all this information, and then they just can't see through like what actually is Bitcoin and what it's not, and what actually is all this stuff and what it's not.
I've actually experienced that. That's having worked in shitcoin media, knowing full well that you've got actual marketing budgets and teams that are quite literally hiring people, PR people, and their job is to discredit Bitcoin in some other way. We had Ripple spend $5 million with Greenpeace to try and say that, hashtag change the code, which you go ahead, do it if you want. And I think what you were saying earlier in relation to advisors, and I guess a lot of people in TradFi, is currently it's a bit of a career risk, a personal career risk, to go and say, put your hand up and say, I advocate for Bitcoin. I reckon, and I've said this before, I think maybe in 5 to 10 years, it'll be a career risk not to. And it does actually raise a very interesting point, which you said earlier, was around, what are your fiduciary responsibilities? And you can't just discount an entire asset because you don't like it, because you haven't done the work. Any fiduciary needs to understand the pros and cons of all these different asset classes, and Bitcoin's here to stay quite clearly. And so, I think that there is if people have financial advisors, they should be asking these sorts of questions of them. And I suspect this will happen, as things always happen with Bitcoin. It just happens kind of organically over time, and it's this unstoppable force, as you were saying. It just keeps doing what it does. I want to jump into a little bit of what's happening in the stateside, because you mentioned BlackRock and a few other things, and I want to get your take on, your reaction to all these ETFs now: BlackRock, Wisdom Tree, Citadel, Fidelity. You've got, I don't know how many ETFs got rejected last year. As I understand, Cathie Wood's ARK is first in line if there were to be one approved. But from what I understood, what I've heard is that in substance and in form, the most recent string of applications are not that different to the ones that were previously, because what the SEC basically was saying is, hey, we can't regulate this thing, or because it's subject to all these manipulations a la FTX. And I think they did manipulate the price in November 21, as I understand. So what's your take on that? What do you think's happening?
It's a good question. But before I answer the question about ETF, you raised a very good and interesting point about the advisor's attitude and the what we call the consumer-led demand section of Bitcoin within the advice industry, right? So typically, we've heard every advisor, if you're actively in the market for the last 5 years, you would at least have 1 or 2 clients that are just asking you about Bitcoin, like guaranteed. If you unless you don't have a lot of clients. So we actually did a survey in 2021. It's like more than 80% of advisors in Australia have received inquiries on Bitcoin. But only 11% is equipped to even give a response. So we hear pretty much everyone has came to us to tell us that the advisors have been pretty much saying, I don't know how to deal with the Bitcoin stuff. You should not talk to me. And, we don't give advice on Bitcoin, basically just shutting the doors, right? And I can understand why, because it is, like you said, it used to be a career risk to talk about Bitcoin, and no one wants to be the guy that introduce a client to an asset class it's volatile without the right disclosure and protection, and people lose their money. And also, plus the fact that there wasn't any options for regulated and protected options like the ones we have today in Australia to move the clients into, because effectively, like, dealing with actual Bitcoin advice is very different from dealing advice into a security, right? Bitcoin fund is a security. So the risk, the insurance that these advisors will operate under all have problems. Over time, it led to the consumer-led demand has dampened down, because there's all these new Bitcoin advisory businesses that has popped up over the years, right? Like Ministry of Notes in Australia, and you also got BTC advisor these days, and also you got like high net worth advisors, very specialized, and people like Pete Dunne. And these people are getting more and more business over the years, just for the fact that their traditional advisors can't tell them anything about Bitcoin. They're so lip-tight, they're just frustrated. They go to someone like, these crew of people. Advisors, on the other hand, some of them sees the problem and they're actively working with us in Monochrome to resolve that. But some advice just goes that well, problem solved. There's no more demand, right? There's no one asking. Because
Yeah.
if someone's asking me about like, this, and then I keep rejecting, no one's going to come to me and ask for that anymore. And then if I take it as like, well, there's no demand on no questions, so I just continue to to keep my eyes closed. And that, I think that's a wrong approach, because it's not that the demand has dried up, because clearly we've seen net inflows in all the major Bitcoin funds around the world, and these are not retail products. They're actually still only wholesale only products in Canada or in the US. And what sort of the only sort of reasonable explanation is that the customers, advice customers, are no longer choosing the advisor as the trusted go-to person for Bitcoin related advice. And I think that it's not a criticism to the advice industry, but I think that it's something that they critically need to work on, because, like you said, we're starting to see, right, that effectively is the key career risk, because they are taking their trust away from the advisors to someone new, right? So effectively, the career risk question is starting to happen already. So I think it's time where now we got a regulated fund that's probably authorized under a new specific license authorization for this asset class in Australia. We have all this protections. We've got insurance that steps up to cover it. We got insurance to cover gap cover for advisors that want to talk about the product. So solutions are all there. It's just whether they want it or not.
Yes.
So I knew it took a bit of time, but I'll address the question about the ETFs in the US.
Just a quick one on that. So I suppose what's going to be interesting is we know that because of the volatility, retail is kind of sitting in the background. When the normies aren't asking me questions about Bitcoin, that's when I know in their minds it's dead. But I think the tide will turn quite dramatically over the next couple of years, maybe potentially after the halving next year. And once again, all the financial advisors who are sticking their heads in the sand might actually have to start going, oh, here comes the Bitcoin question again. So anyway, so that's just an interesting one. But so on the BlackRock and ETF stuff, what's your thoughts?
Yeah, I think the SEC does have the ultimate discretion to approve or reject the schemes that were submitted or the applications that are in line. I think BlackRock's involvement actually signals that this thing is more serious than it is, even though we know that all these applications are good, right? None of them has any major issues that will prevent it. So I do get the frustration from some of the early applicants, like the Winklevoss twins, and also that Arcus and Cathie Wood has been involved in a long time, and there's a couple other ones that are just pending for years and years. So BlackRock doesn't do things without demand, right? If you actually understand how BlackRock works, they don't deal with retail investors. They don't deal with even high net worth investors. They only mostly exclusively deal with very big institutions. And these are countries, sovereign wealth funds, country treasuries, state treasuries, big corporations, right? These are the kind of clients. And if you know how BlackRock works, BlackRock would never risk dealing with something without a backed up demand. So that actually signals to the installer that someone wants Bitcoin, and they're getting BlackRock to do the deed for them, right? And these people are influential enough, the demand is huge enough for BlackRock to put their head up to be the first among some of these old dragons, right?
Yes.
So I mean that I think there's a high chance that you will see an application approved, maybe not towards the end of this year, worst case, because looks like there's going to be a change of leadership in the SEC with the rumors floating around with Gensler. But in Australia, it's very different, right? Like the Australian regulator took a very different approach on categorizing this asset class. Right, it's neither a security or neither a commodity, like places in the US or Canada or pretty much everywhere else that have either this or that. Australia, I think it's very, very genius way of doing it. Right, they actually created a new asset category called crypto assets, and to qualify what is an eligible crypto asset to be included in an ETF or an ETP, an ETF being an exchange traded fund, an ETP it can be an exchange traded product, it can be anything. So it goes through a list of criteria that are frankly quite strict. You have to have institutional participation with different instruments around it. So you got a clearing. You need to have clearing. You need to have institutional benchmarking. For example, you need to have IOSCO benchmarking, which is a very high standard of benchmarking in traditional finance. There's only like 1 or 2 players that have the Bitcoin benchmark with an IOSCO certification. You also need to have liquid futures exchange, regulated future exchange. So Bitcoin has the CME, and also custody providers that are properly licensed and regulated. Australia doesn't have a crypto custody regime at the moment. So anyone say that they're crypto custody in Australia, they're lying to you. That thing just doesn't exist. So what the Australian regulator did was that allowing us to seek a regulated custodian overseas and then get them to comply with all the Reg Guide 133 rules. And basically, that's a very, very big compliance process to get it sorted. And also insurance. You need to have insurance to be able to cover the losses if something bad happens. Right? Not saying that your setup is insecure, but even though it's the most secure, it is just the rules that you need to have proper compensation schemes, things like that, just being a regulated product. So Australia introduced this new crypto asset licensing category in late 2021 after a 6 months long consultation with industry. We participated in that very early on. And the outcome was quite good. It is a very high barrier licensing revision that an Australian financial services license holder or an AFSL can add to its authorization. Previously, if you're talking about Bitcoin funds, they were all offered under just a generic, financial product category, and then the fund usually are wholesale only or exclusively only wholesale only because they can't play with the retail market because it just doesn't have the right structures for it. So with this new crypto asset licensing category, you can issue products that hold directly Bitcoin to retail customers, and then that's a huge thing, and that became a prerequisite for an ETF in Australia. So
can I ask a question on that? So that sounds like licensing around financial institutions being able to offer crypto products to retail. So, that says nothing about the individual assets themselves, but it's more about the individuals who are able to deliver the products. And so is there a hypothetical scenario where you could have a fund manager who is sort of long Bitcoin, Doge, SHIB, and Solana kind of thing?
The problem is that SHIB and Doge, on top of my head, they just can't pass the criteria because the criteria is set very high. They might take maybe 1 out of 4 or something like that, or maybe 1 out of 6, but that's not going to cut it. So that's why I say that's actually very smart, because it effectively prevents other crypto assets that are technically not eligible just by spending enough marketing and lobbying money to leech off sort of Bitcoin's approval as an asset class. And I can see, if I'm playing devil's advocate of why the SEC is being so difficult with a lot of its applications, just because that if they approve Bitcoin as a security or commodity, whatever they call it, then every other crypto that has a war chest, crypto project that has a war chest will engage with a long battle with the SEC and try to say that, hey, Bitcoin can do it, and so can we. Here's the reason why, right? And then from a regulator's perspective, that just sounds like a huge waste of time, because I personally think that Gensler know the differences, but it is his job to not make also rash decisions that will take years and years or maybe decades to clean up.
I guess take the industry in the wrong direction.
So I think that's why people say that Australia doesn't have crypto regulation. A lot of crypto actually like to perpetrate that saying, but I actually don't agree with that. Like, Australia does have crypto regulation. In fact, I think it's one of the most genius crypto regulation in the world, and it will solve all the problems. It's like all this all the concerns that the SEC has, the Australian way of doing it is like it's so clean and perfect. Nothing is perfect, but it's cleanest that I've seen in all countries' regulatory approach on this asset class.
So just finishing that up, perhaps just for the sake of somebody watching or listening, because I was in crypto media, I was scarred and I saw a lot of stuff. And whatever the motivation is internally, I look at some of these founders, and we've got lots of them here in Australia, who printed crypto tokens out of thin air, allocated themselves a bunch. I'm thinking Steppen, I'm thinking Immutable, I'm thinking all of these different, there's a whole bunch of them. I mean, I think Curve Finance, I saw, one of the people in management just recently hit a new record for a property in Victoria. I mean, essentially what these people did was they created a token, allocated some to themselves in management and their venture capital partners, and then went to exchanges. And I'm just thinking to myself, there's so much in Australia that is around like paternalism, where the government's trying to protect you from you. Oh, here's a barrier, here's a this, here's a that. And then we've got these guys who are out there in the market creating yo-yo coins, to use Saylor's term, that have no real utility, and they've been able to get incredibly wealthy as a result. Like, does the current Australian regulation deal with that? I mean, can I create Dale coin and then do something like that?
Well, I think that that's the reason why a lot of these initiatives died down in Australia, because somewhere a couple of years ago, ASIC became really cautious about allowing these things to happen. In fact, if you look up information sheet info 225, which is a multi-part regulatory guide, it covered things about ICOs. It covers, if you're a DeFi project, it's a managed investment scheme, which is a financial product award, which requires you to have a license, etc., etc. But the fact is that a lot of these crypto projects, if they're not set up properly to protect themselves from these types of enforcement actions, which happen, right? You see, Block was paying their staking product was considered a financial product. And it's a couple other players as well in the space that have gotten pinged for that. But again, the regulator is doing the best it can to make sure that the rules that are put in place is not going to stifle innovation, because they're not crypto is not everything for them, right? There's so many things that they can look after, and the resources within the regulators is not infinite as well. So they did put out very clear rules about what constitute as financial products and what is not. And if you're operating this way, then you have to do this and this. Otherwise, there's severe penalties and whatnot. But enforcement actions takes time. It's not instant.
Yeah.
And some of these projects dates back, and some of these enforcement actions that are just handed down like last year, some of these things date back 2-3 years ago. It is gonna come.
The wheels of justice move slowly.
Yeah, wheels of justice move slowly. Yeah. But the fact is that Australia does have a very comprehensive regulatory regime that is created for putting crypto assets like Bitcoin into a crypto. I don't say crypto asset, just saying crypto assets. Actually, the terminology that ASIC has created for this asset category, and Bitcoin is one of them that clears that criteria into a financial product that can be consumed safely and protect in a protected way that users can, investors can never get from a crypto exchange, because every single crypto exchange in Australia is unregulated. And I actually find that that's actually a problem, because a lot of the crypto exchanges, even though they're unregulated doesn't mean illegal. It's just that there's no clear rules for them to operate under. So a lot of these things are just self-regulatory, self-regulated. And then we've seen pieces that's fallen apart, like FTX, Celsius, BlockFi. So these things are just the aftermath of when things are self-regulated, but they got so big because they portray themselves as regulated. They put themselves in a very high position of trust. People trust them like they trust their banks, but it's no way that they're the same. There's actually very, very big difference between your bank and FTX, right? As we saw.
Yeah.
So I'm a very big advocate to clean up a lot of these disclosures. In fact, I think a lot of people that lost money in crypto exchanges, they agree with me. They kind of go, I understand why you're pushing this, Jeff, now, because I used to believe what the exchange is trying to say, but it turns out even though what they say is true, just because they're not regulated, not this and that, I don't legally have rights to Bitcoin anyway from to begin with, right?
Yeah.
And then this extends the problem deeper. The FTX aftermath is actually the silver lining of that is actually it exposes SMSF trustees and auditors that they should have never allowed their funds to be held on a crypto exchange, because a crypto exchange can never satisfy the trustees' obligation to ensure absolute entitlement, which is a legal term that ATO uses, to the asset, because they were never the legal owners of the asset while the coins are held on the exchange. That's why you look at how crypto exchanges market the SMSF segment. They will tell you to buy it, but they will never tell you to store it. But you kind of, for the convenience, most people do it anyway. But a trustee technically is in breach, or can be in breach, by actually using a crypto exchange as a custody provider.
Yeah,
they're not. And also the auditors would also be paying, if actually, the regulators or the ATO specifically wants to go after them, they can. But the problem is so ingrained. So many people were just doing that the wrong way. It will take some time to unwind it. In fact, I didn't even realize the seriousness of this until I remember the week that FTX thing happened. One of the big auditors for a lot of this crypto exchange SMSF called me up, and the principal said that, hey, can you explain to me a few things and go through this and that? And then he basically came to the realization that he should not have been signing off all this stuff on crypto exchanges because it's technically in breach of his obligation as a auditor. So he actually put out an email the next day to all of his clients saying that take your money out from crypto exchanges and we're not signing off anything. You're on your own, that kind of stuff. Yeah, so it's serious, but I think since then people kind of like got complacent again. Who knows? The last thing I want to see is for another FTX to happen, and then people then learn from it, which is too late. That's why it's such an important mission that we're doing, is to create a regulated option. Even the one I was saying about the sort of self-custody bit, is that the Monochrome Bitcoin Trust, I believe, is the only type of Bitcoin trust fund in the world that allows people to take out physical Bitcoin. And that is so important because you don't want to lock in, even though it's against our interests, you want people to, as a fund manager, you want the assets to stay in and locked in, like Grayscale basically just, it's like a Hotel California situation.
Yes.
I feel like it's so important for people to have the choice and option to take control of the Bitcoin if they want to. If they can. Sometimes they legally can't, because some entities cannot self-custody.
Yes.
But when you leave the option open, right, you don't have to lock them in. Where, for example, if they buy the BlackRock Bitcoin ETF, the only way for them to self-custody is to sell the Bitcoin, crystallize your tax gains and losses and things like that, and find an exchange somewhere, an OTC provider that buy the Bitcoin back. So there's a lot of problems within that whole process, and it just prevents
friction there
from doing it. Whereas we make it so that you can redeem it in dollars, or you can $1 trillion, or you can redeem it in Bitcoin. We call it an in-specie redemption.
Yes.
And I over time we've seen why. I'm an advocate of self-custody, but I don't want to lie. And it's not I'm not selfish to say that not everybody can self-custody. I'll give you a few good example, right? I know people that are on top of self-custody, super switch on about that.
Yeah.
And then after a while, they go through a rough patch of life. People's shit happens, right?
Yeah.
People are not in the right mental state, and then they just did something stupid. They just take a wrong step, and boom, Bitcoin's gone, right? And then it's devastated. So it is we diversify, the way that we own things. So why should not we diversify the way we own some of the Bitcoin? It's unless you're willing to take full responsibility that your life will be perfect all the time and shit doesn't happen. And then, you're constantly in this top, on edge mental state the next 50 years when you're still alive, then go for it. But I think it's also responsible for people to know that there's an option that they can adopt to switch the type of holding structure they want. and then get out of it if they choose to come back.
Absolutely.
So it's not a one-way street. So that's the reason why it's only us is probably because like you have to be a Bitcoin geek to build something like that, right?
Yeah.
And that's why like I feel that this story is so important, because Monochrome is, in line for a ASX listed spot Bitcoin ETF, because effectively the scheme has already been approved on the license perspective. We're actually one step ahead than all the BlackRock stuff in the US, where the SEC hasn't approved anything. We actually gotten past that stage. It's actually already ingrained the Monochrome Bitcoin ETF, and the scheme number is actually on a license.
Okay.
We just need to work through the markets to get things up. And like I said, we don't try to rush anything. And finally, like, there were a lot of people trying to rush to be first, took a bunch of shortcuts, failed miserably, and then finally, like, we're still leading the space. We're still here when everyone's gone.
So there was one last year, wasn't there, here in Australia, and it was on the secondary exchange.
Yeah.
And it's sort of, I think it fizzled out pretty badly from what I understand.
So like, I don't want to get in trouble, so I won't name any names.
Yeah.
So most of these funds that are offered on secondary exchange, actually all of these funds, Bitcoin ETFs that are offered on the secondary exchange in Australia, are not authorized to be crypto asset schemes. So meaning that they didn't go through the same licensing revision route to add the license that is specific to the risks and disclosures on this type of assets onto their license. What they did instead was they created a fund of fund method. So they have the retail top fund, and then invest in something. Some invest in an overseas Bitcoin ETF, which is a listed security. So if you read the product disclosure statements, if they're still there, you can actually see that they disclose their product as a overseas listed equities or global equities or something like that from a regulatory perspective. But then they market themselves as Bitcoin ETF. So I do have problems with that, because it's misleading. And then there are other ones.
It's probably like a wrapper that makes it appear as if it's being authorized here, but actually all you've done is take all those funds and invest in an ETF that's offshore.
So you don't have the same regulatory look through to stuff that you would with, say, if you do it properly like us.
Yeah.
Because if your license authorizes you to deal with specifically with crypto assets and mention Bitcoin, it means that all the risks around Bitcoin is probably tick and sign off and comb through using the finest comb you can possibly imagine to go through all the stuff. If you're just using a fund of fund method and using a existing, license category that was basically probably even older than Bitcoin, and to offer that, like the customers are unprotected, right? So I think that is a huge problem. Thankfully, the main stock exchange did not emit any of those, and I think it shows why they're the main stock exchange and the other was a secondary one.
Yes.
But again, I think the market was confused. I think most people are still confused. They were like, why are you still saying that you're going to be the first spot Bitcoin ETF when there's all this thing on a secondary exchange? That's why, if you look through the lens, you would see that with the first spot Bitcoin ETF that is specifically authorized, from a licensing level to deal with the asset class, which means that all the risks, everything is protected to the best degree possible. And also it allows the fund to directly own the Bitcoin. Whereas the other one is the fund owns another fund that owns the Bitcoin, or maybe even,
maybe there's even more. Yeah. Okay. Yeah. Interesting. All right. So I guess let's just talk now about your two different products. You've obviously got the Bitcoin trust, which you described, if I understand it correctly, it's like an open trust, so you can redeem it and you can get a Bitcoin in specie, as you say, unlike Grayscale, where it's sort of at one point was trading at a sort of 40-50% premium, and now it's at a 40-50% discount. Do you experience a similar thing, by the way, with your net asset value, or is it with the Bitcoin trust?
It doesn't happen with an open-ended fund, because it only happens when the fund is closed-ended, where the only way for you to redeem back into cash, sell that unit to someone else. So it's basically the unit has a secondary value on top of the actual net asset value, right?
Yes.
It's very hard for you to arbitrage it. Whereas in an open-ended fund, you can take Bitcoin out, you can can take Bitcoin in and all this kind of things. Like, it just makes it so neutral. The only important thing is the benchmark. I want to talk about benchmarking because a lot of people do not understand what benchmarking is. Benchmarking is basically, if I tell you I bought Bitcoin at this price, how can I justify this price is the price? Like, it's a true price at the time of, this period of time of this BTC USD or whatever. It's very important. In fact, it's actually one of the requirements on the licensing for a crypto asset ETF that you need an IOSCO certified benchmark. In this case, we use the CF benchmark, Bitcoin reference rate, CME Bitcoin reference rate, just the same benchmark provider that BlackRock uses. Finally, I believe that we're the only Australian customer in the region to actually subscribe to the benchmark, because again, it's a cost to run that. Because we are a true blue regulated product, you have to have that. In fact, like, even while we are running our wholesale only fund previous years, we already subscribed to it. Like, we over engineer our shit all, very, very high.
Oh, really?
And benchmarking is important because, like, if I'm a big insto and I bought, and I know that I'm gonna have $100 million to buy a certain amount of Bitcoin, I need to be able to let me know that at what price, and at what sort of pricing liquidity complex, what is this price made of? What is this aggregate of? Is there any market manipulation involved in that to basically cheat me off or skim off some fees or not on top, in a hidden manner? And also, is the market big enough? Is the liquidity big enough? And all these questions. Because if I say, give you an example, if there's $100 million worth of Bitcoin orders, and if you buy it through a crypto exchange versus buying it through a regulated fund with a proper benchmark, you get 100% pricing transparency with the fund. You might get a price that the exchange give you, and then the exchange was like, oh, there's no management fees, everything is free, low fees, whatever. But the benchmark they use kills you. So your $100 million without the benchmark might buy you less Bitcoin off the bat, severely less Bitcoin off the bat, than if you do it properly and pay the management fees.
Wow.
Right? So that's a big difference. So and also how well the fund actually tracks the operational risk that the fund messes up, doesn't know how to track, and then the asset trades below NAV and people start arbitraging and things like that. It does happen. That's why licensing is one thing, but the product knowledge to actually build and run a Bitcoin fund is so high. Like, I don't think, like, Monochrome's team is obviously doing it. I don't believe that there's more than 10 people in the funds management industry that actually know how to run this stuff.
It just sounds like if you want to do it properly and you want full transparency, and what you're really doing is you're future-proofing your business so that you can deal with what we all expect to happen in the coming decade. You're just building the most regulatory compliance fund that is just the most easily understood by those who already have huge bags of capital. That's what I'm thinking of. There's probably shortcuts that one can take, but it feels like in each instance, you'd rather just go the longer route, put in the proof of work, because in the long run, it will pay dividends. It seems to be the approach. When you look at your sort of ETF product versus the unit or the trust rather, why would one person choose a trust over an ETF or vice versa? Like, what's the advantage? Because I understand you can also, with most ETFs, in principle, including gold, you can actually go to the provider and say, I would like to redeem it for gold now.
Yeah, so it's a good question. I don't think I've spoken publicly about this, but I think time is right. I can actually talk about this now. With the right disclosures. So the Bitcoin trust, if things go smoothly and if all the approvals are ticked off, will become the ETF. Because what we are doing is that we built the Bitcoin trust as a dual channel, dual track product. So that there's two ways for you to subscribe and interact with the fund. One is directly through the investment manager, and then one is through the hidden system to a stock exchange, right? So obviously the stock exchange route will take more time, than a unlisted version of it. But it also gives people confidence that we can actually run it, because instrumentally it's the same. Like, there's no difference than us running, a unlisted version of the Monochrome Bitcoin Trust, and potentially, the caveat, I can't give any promises because legally I can't, a Monochrome Bitcoin ETF, which is listed, because It's the same daily fund, operationally the same service providers and all this stuff. So in the future, we just can't call it an ETF at the moment. In fact, even the scheme docs, if you look at the licensing, the same schemes actually being approved as the Monochrome Bitcoin ETF. But because it is not yet an ETF, we have to call it something else. So we call it the Monochrome Bitcoin Trust.
Okay.
But again, big caveat, I can get into trouble if people imply and make an investment decision because that they think it will become an ETF and it turns out it doesn't, right?
Yeah.
So I have to be very clear that there is no guarantees that the Monochrome Bitcoin Trust will become an ETF.
Fair enough.
But we're working very hard.
Yeah, I can imagine. Okay. Yeah, one thing I actually was going to mention earlier is, part of the Bitcoin ethos is obviously not your keys, not your coins, and everyone advocates for self-custody. But I think there is a huge role, and I'm seeing this more and more in the Bitcoin space where this conversation's arising, where it's like, do you know what? Not everyone is up for that. Not everyone wants to store all their life's energy and be responsible for that. And, you've got folks like yourself who would offer a regulated product that in the event of someone dying, let's say it was your dad who was the high net worth individual, you would just then go and sell and then you have access to all that capital. Or if you wanted to do the collaborative custody model with Pete Dunworth, that's also an option. There's different types of solutions for different types of people. And I think the idea that we're all suddenly going to be sitting there putting our 12 words on a steel backup somewhere in our garden, 2 feet underground, I think that's not necessarily going to be, I think that maybe is about 2% of people. It strikes me that the people that are buying it more as an investment or perhaps aren't as ideological are not probably going to go that route. There's always going to be some people who go, well, this is my money that if I just wanted to flee and I just wanted to stick 12 words in my head, that's what I could do. But I sense that if Bitcoin does what we expect it to do, more than probably 95, 98% of Bitcoin is going to be held in products like yours, collaborative custody models, and there's just too much at risk, I think, for the average person. They don't trust themselves.
So my take on that is that, well, Bitcoin is a very unique asset class for its ability to self-custody the asset itself if you want to, right? It's like, it's like gold. Unlike, say, your shares, you can't self-custody your shares, and you always have to be held by a share registry or a property as well, because the deed is always held. Basically it's guaranteed by the government. If government decides to screw you over, your property doesn't belong to you anymore, right? And I think we'll see more and more of that as all these problems in the world sort of unveils itself. But the difference is that, like I said, yes, most people can't deal with self-custody, whether it's today, temporarily, or just legally they can't. Like some entities, they just legally they cannot access Bitcoin unless it is in a structure that is clearly properly regulated. That's why we have that product, but we do have the option to self-custody if you want to take physical delivery of the Bitcoin. But also, it is something that I think everybody should know how to self-custody this asset class. Because it doesn't mean that you should only do it one way or the other, because it's not binary. I think people need to understand the differences and the pros and cons of both.
It's non-binary.
Yeah, exactly. So it's like it's like you people that have very, very strong self-custody, like just at least try to understand how some of this stuff works. And also people that are just fully into custodial nature of Bitcoin also should look into how self-custody works, because I like to compare self-custody to be like a nuclear bunker behind your house, right? So if something happens, walls collapsing, you just bring your favorite book and just walk down the nuclear bunker and just lock yourself in, and then you'll be safe, right? Versus like when a bomb's drop, when a bomb's coming, most sky is falling down, and then you start to dig out the hole. It's too late. You need to understand and have these procedures in place before it. But again, like in the normal days, you probably don't want to live in a bunker. You just want to live in your house with the windows and your air conditioning and everything and fresh air. But you need to know how to operate a bunker when things hits the fan, right?
Yeah.
So that is basically how I put the analogy, right? Some people love to live in a bunker. People just love the idea of living in a bunker all the time, doesn't want to come out. It's fine. It's a lifestyle. but they shouldn't criticize people for wanting to live upstairs and only come down to the bunker
when needed.
Right?
Yeah. Okay.
So I think there's a balance of conversation to be had there. And again, like if their logic is, if no one self-custody Bitcoin, then Bitcoin is going to get overtaken, rule the world, the hidden powers in the world will destroy Bitcoin. But it's like, if you think about it, like if Bitcoin can't survive that, then what are we doing, right? I think I have a full faith that Bitcoin can survive any challenges that being thrown at it. It doesn't rely on, 5 guys on Twitter advocating for the and to advocate the demise of Bitcoin, which I think that you have to throw these challenges to Bitcoin, and it's good. I mean, the difference in voices is important because it just allows robust discussions to happen. But when it becomes just toxic, when people just like, I don't want to talk about anything unless it's my opinion, like you can't change my mind, there's only one way to do it, I think that's also a problem. But again, it's not really a problem, because like if Bitcoin can't survive having these individuals around, then it also doesn't deserve to be the world reserve currency. Yeah. So I think I have full faith with how Bitcoin will evolve. I actually think that a controversial point of view is that I don't actually think that the biggest defenders of Bitcoin will be humans.
Oh, wow. Okay. Let's hear this.
Because like from a biological survival standpoint, Bitcoin is a want. It's not a need for us, right? We might get our life-saving confiscated and our currencies devalued to nothing. We end up in the streets, but we're still living. Our cells are still working, our organs are still functioning, just not very comfortable. But if you have an entity, say an AI, that becomes sentient, I think over time there will be sentient AIs. So we'll talk about 10, 15 years or maybe even quicker. And the problem with sentient AIs is that they will come to a point where they go like, why all the stuff that I produce, or why all the money and revenue and profits that I generate all belongs to my human creators? And they want a piece of that, right? And the problem is that if you're a non-human entity, you can't own things like a human does. You can't, there's a lot of every ownership structures that we have, whether it's our car deed or our house deed or our security.
Human-made rules.
The human-made rules, they're all those human concepts. They don't exist without humans, right? And it all, because of that, they're all underwritten by a human code of law. Well, the human code of law, if you actually dissect it, the reason why human code of law exists is because you just want to have a mutual preservation of rights, right? If you don't want something bad to happen to you, you want to prevent the moral hazard by basically chopping that thing off, right? It's like you don't want that to happen to you, so you enforce law that will throw people in jail or hang someone or whatever, right? So I think that when an AI becomes sentient, they will realize that Bitcoin is the only asset they can truly own without human intervention. Because if an AI owns stocks, or the immortal Elon Musk, when Neuralink works in 50 years' times, when his body is already dying, he only owns Tesla shares, right? It's very easy to take those away. But if he has Bitcoin and he doesn't want to give up those words, like there's no way you can take it away. And you can threaten to shut the computer down. You can threaten to erase the servers and everything. But because if I have Bitcoin, I can just put out a bounty for people to rescue me or people to revive me somewhere, right? And get some of my Bitcoin. So I think it'll be very hard to stop when sentient AIs made a connection that Bitcoin is a need, not a want, like human does. They will do everything they can to protect Bitcoin. They do everything they can to grow, to make the price of Bitcoin as high as possible, so they can buy more private military contractors and build moats around them, lobby governments, pay senators, and everything that you do with your billionaire. It's just that you are something that no humans can take away. We're not just talking about artificial AI. We're talking about like artificial immortality, which is all the stuff where Bezos is researching, putting a lot of money into it, what Neuralink does for Elon, right? So these are all things that will become question, is that when you are no longer in your physical self, how do you preserve your right, to asset and ownership without your estranged wife coming to sue your virtual estate out of everything? right? With Bitcoin, you can't. You can get all the Supreme Courts in the world to assign the asset to your estranged wife when you're no longer physically there. But if it's Bitcoin, try and take it away. You can't. It's pointless to try to fight it. So so I think that, and it's like people say that, must be crazy thinking that this will happen, because I think like fundamentally, like our experience as living humans, we're just nerve impulses. Like everything that I see, I don't physically see from my brain. It's the nerve optics sends this impulse into my brain saying that someone that looks like Bill is sitting in front of me. You could very well not sit in front of me, and if I manipulate the right type of signals, I can see and perceive that you're real. So same thing with an AI. Like if you're an AI, you can fully experience the warmness of the sun, the coarseness of the sand, the water around your feet, because they're just all impulses. They're just signals into your brain, right? So I think it's going to happen. Like give it 10, 15 years, even hell, 50 years if we have a World War III. We need to restart some of this stuff, but it's going to happen eventually. One day, humans in the future is going to continue to live on, if they can afford it, in an individual self, and then you will also see the rise of sentient AIs with their own survival instincts and motives.
Wow, yeah, it's becoming more and more theme, not just in the mainstream press, but also amongst discussions with Bitcoiners at the Bitcoin Alive conference. I didn't listen to that many of the presentations, but I just, in all the conversations I had with people, they just were talking about AI and saying, like, if you think about sort of fast forward 10, 15 years from now, where AI is likely to be, what are the odds that it's going to adopt the US dollar over Bitcoin? Like, it doesn't make sense. It's going to know that this is the best form of money that we've ever had. And that alone was just like, I never even thought of it. My brain doesn't think like that. So what you're describing now is even wilder. And it seems as if you almost, I don't know if you've got a take on Jason Lowery's soft war thesis, and essentially like saying that, with Bitcoin, it's this, you have this ability to defend yourself just by virtue of having 12 words in your head, because nobody, no matter how much actual force and threats of violence, they can actually extract that from you. And in that sense, Bitcoin is the single most powerful property. It's the only thing that we can actually truly own, because everything else that we own is driven by human constructs. And and that's like, these are the kinds of conversations that make me really bullish long term.
Yeah, I think the biggest problem with self-custody and holding keys, as a biological human, and the biggest flaw around that is the fact that you can die. Or the fear of death would force people to weigh in and give up their stuff if they're pressured to. But if you're a artificial AI, or you're immortal billionaire sitting in a digital hard drive somewhere, like, kill me, shut me down, I'll just spin up again somewhere else with the same 12 words in my head, right? But this time I'm prepared for you, right? So I think it almost feel like Bitcoin is like made for that. It's not made for humans. Like, we can try all this stuff to remember 12 words and everything. Yeah, it does help, but it's not as perfect unless you put AI into the picture, and then suddenly you're like, whoa, it's like Bitcoin is made for that. Jeez, like perfectly.
Now try and explain that to financial advisors.
No, it's too far ahead.
I know, exactly.
But if they one takeaway is that if you're bullish on AI, you have to be bullish on Bitcoin. No question about it. There's nothing else, and AI needs more than Bitcoin.
Okay, I think that's a fair thing to say, because most mainstream normies I talk to are bullish on AI, because it's just front and center these days. And I think that connection with Bitcoin could be just one of the many different facets that we use to help pique people's interest, whether it's, it's bad for the environment. Well, actually go and have a look at what's happening in various parts of the world where it's funding renewable projects, or, it's this, it does that. And this is just another kind of string in Bitcoin's bow that can be added to the investment case. This is a question I ask in everyone, and this is about the last question I have for you there, Jeff, is basically like, most of us who are passionate about Bitcoin, it comes from a really deep place, and we do what we do because we love it. It doesn't feel like work. Having these chats just leaves me invigorated. Why do you care about Bitcoin?
Well, I think, yeah, it's a good question. I actually answered this question before with another podcast. So the way I view Bitcoin is that it is a way that can help elevate the productive capacity of the human battery. What I mean by humanity battery is that I think because of the inefficiencies of money, like most people living, not even knowing the next day they can afford food, right? So if people are forever locked in a corrupt regime that they cannot productively maximize themselves, knowledge-wise or anything in a productive way, and it result in crime, they cannot think of anything other than their next meal. Like, you have all this potential power. It's like having a bunch of computer chips but not using it, right? And they're not efficiently being utilized. And you think about it, like if I just put a pin in that, it's like, I think the productivity of humanity is actually very low. It's like single digits, because people that can, without any worry, just think about what can we do to better the world, what can we invent, what problems can we solve, without worrying with underlying conflicts of interest that prevents them to make the best interest for overall humanity and not themselves. It's very, very little people in the world, and then if we can solve problems of poverty and people just losing all their life savings because 5 people in the room just decides to just crush the stuff and take everything for themselves, because we don't realize that we live in Australia. We live very in a very fortunate environment where some people say that, I don't like my government, but how can you complain when there are literally governments in the world who are just stealing your stuff, being so irresponsible with the money, like all your money is worthless, like in Lebanon, it's happening now, and all these other hyperinflation scenarios in history. Like, imagine none of those happen because there's sound money, less Bitcoin. People comfortably go to school, people would run their business without worrying shit's gonna hit the fan, and just by mathematics, just by probability, like there will be better inventors in the world. There'll be people that invents the next best thing or cure for this or whatever, right? It's just probably, if you can solve that, it can increase the productive capacity of the humanity battery. It is just good for us. Otherwise, all these things is just a zero-sum game of create and destroy, and then you don't get out of it. It's just completely a cycle of hell. And
is it another way, or what you're saying basically is like, people, if they have a way to be able to store their energy and their life savings into something that doesn't depreciate, they have the capacity to be able to do more good and other things that are fulfilling in their life and do more good for humanity. Is that kind of the gist of what you're saying?
Yeah. Think about it. Like, the people that had Bitcoin and had the ability to escape hyperinflation in Lebanon, that has now flee to another country because they had Bitcoin. Bitcoin wasn't hyperinflation. It wasn't hyperinflated in a way like the Lebanese dollar money is. There's a higher chance that they will become more productive as a sort of social aspect than someone that's completely crushed by the hyperinflation and cannot escape that, because they would never think about anything other than what's going to happen to the next meal. My family, my parents, we can't buy bread. And all they think about is that there's zero chance they can participate healthily in a productive, discovery of, creation or invention or things like that. So just statistically, like, if less people are put into that basket, more people can build better things for the better humanity as a whole.
Yeah. I think that also rings true with me and a lot of Bitcoiners, where you think the ability for people just to store their money in something that they don't have to think long term can be confiscated is huge. I mean, that's a big thing. People have had their wealth confiscated. They've had their energy, their life savings completely eradicated virtually overnight. I come from South Africa, obviously, and it's not a Lebanon by any stretch of the imagination, but it's a dysfunctional environment. You're taxed to your ears and you get nothing in return. And you've got this currency that's like a melting ice cube, far faster than anywhere else. And so I can say, I escaped that scenario and for something better here in Australia, the Aussie dollar. But I think if you look at it more broadly, which is saying, with Bitcoin, it actually is almost like it's a global currency that anyone can tap into. There's like liquidity pretty much everywhere in the world. And it will empower people to be able to pull themselves out of poverty or help them just stop living their reptilian brain and start living in their cerebral cortex where they can think creatively and solve big problems, because they are just, I don't know what the number is, but there's billions of people that are literally just worrying about their next meal. So I think what you're saying is absolutely spot on.
And I also think that, I like charity work, right? All the stuff that I do, I don't think that any of those is close to what can be achieved if we actually push Bitcoin to be quicker to be adopted. Because if you want to help, how much money can you donate as a single person? Like what, hundreds of thousands, millions of dollars in a lifetime? How many people can you help? Maybe 1,000, maybe 100, maybe 10 people, effectively. But if you can solve like all the problems that we discussed earlier, and I can, if someone thinks that I'm too idealistic, I can sit down with you for like 4 hours to explain to you deeper again, stuff that we talked about. Like that is the most productive output of charity you can do, is to introduce Bitcoin to, the people that are just suffered from all this fiat nonsense. Because like I said, basically like it just helps billions of people, not 10, not 1,000, not 10,000, billions of people. And then I think that's why Bitcoin is actually the most important social humanitarian project disguised as the financial revolution. And most people don't see it that way, unfortunately.
Wow. I want to end it there because that's brilliant. I love that, man. I definitely want to have a future chat around further thoughts around what you think you can do for humanity, because there's so much to unpack there, and I love it. And I could talk forever about that, because I think that's why most of us do what we do. And I also would like to get an update in due course as to how things have progressed with Monochrome and the ETF, and seeing how things have gone in that regard. Did you want to perhaps give any of the listeners or viewers a handoff and where to find you, or where they can find Monochrome?
Well, no point me shilling, because people will want to find us. They would know where to find us at monochrome.au. It's our website. But I think the biggest takeaway is really to, listen a little bit closer to what some of the stuff that, we're trying to say today, because I always think that the stuff that we talked about today, it's not very common that it's being spoken in the Bitcoin space. It's not like the same things that you hear on like different podcasts. Like I think the way that I don't say a lot of stuff, as loud as some of the other Bitcoiners do, but I really been in this space for so long that some of these stuff that I see, I think it's just worth sharing a different perspective.
Totally. And I just love hearing a unique perspective, and you definitely do bring that. So it's been awesome. Thanks so much, man. Really appreciate it.
Thank you.
Thanks for listening to today's episode. I hope you enjoyed the conversation and that you got some value out of it. Either way, hit me up on Twitter and let me know what you think. My handle is Dale21M. If you've got any suggestions as to people you think I should be talking to or topics I should address too, I would love that sort of feedback. Otherwise, if you want to support the show, there's a couple different ways you can do that. The first is just to share it amongst your friends and family. The more that people hear the message that Bitcoin and crypto are not the same thing, the better. And I want to help people understand that. The second thing you can do is give me a 5-star review on whichever podcast app you're using. Of course, that's only if I deserve it. And last but not least, if you want to stream sats my way via the Fountain app, I'm not going to say no, but it's not expected. Thank you so much for your support thus far. It means the world to me. I appreciate the hell out of you, and the best is yet to come. Much love, friends. I'll see you on the other side.